Hello everyone, petar.jacimovic here from vycofanalysis.com. I want to post the update on my new position on the USD Japanese yen. Also, I will update you the Australian New Zealand dollar actually got stopped out there. I lost 1% on that particular setup, but I got the USD Japanese yen. Basically, I posted on my journal, and I want to speak about explanation for this setup. So basically, I found most trendy currency pair is basically the USD Japanese yen. We are in very strong downward trend, and I found irregular corrective phase here according to Elliott wave analysis. So we got a B where the B is lower than the swing low, and we got a C price stopped at 100% expansion. Not just that price stop, basically the reason of entry is since we are in strong downward trend. That's one first thing, so we got a strong downward trend in the place. The second thing is we finish it potentially irregular corrective phase, and third thing is the price action I found on 5 and 15 minutes. So we got a very nice uptrust bar. Uptrust is usually created and it's created to basically to shake out the weak holders. So for example, sellers who sold immediately at this point here on the swing low, and they put stop loss above, hoping that this will go lower from this point. This uptrust is basically what is what will stop them. Okay, so this is a market makers maneuver where again they push this higher, like, you know, in this case 5 pips higher from this swing high, and then back lower. This, when it happened also in the high volume, is also very good. Not just that, this confirmed actually this corrective phase, ending of this corrective phase. So basically I start to sell at this point here. Once I saw this uptrust, I knew that my original stop loss was above this uptrust, because think like this, they already shake out the weak holders. Okay, since they already shake out the weak holders, it's a very rare, of course it's always possible, but is much more rare to see the second uptrust and breaks of this first uptrust. So it's very rare to see something like the price go here and create another uptrust at this point, you know. Since we already, my thinking was that market makers already took the most of the intraday traders who sold earlier, also trying to ride with trend. So I when I saw this uptrust, this is what I'm watching, and when I saw this one, I was very confident to establish sell position since we are in the downward trend. If you go to 15 minutes, we also got some uptrust on the 15 minutes. You see it's a very strong downward trend. You don't want to be a buyer on this market. Okay, and as you see, uptrust on the 30 minutes as well. This one, which got created after, and so on and so on. So it's up. If you check the trend, it is very strong downward trend on all frames. So this is a the basic principle of volume spread analysis and Wyckoff analysis. So we can call this this corrective phase. We can call this like a redistribution phase. So it's basically it's a bearish flag, but it's also called a redistribution since the sellers again redistribute money here, and we see the new downward movement. Okay, so using the Wyckoff analysis, we found potential redistribution. This is also bearish flag. Using the Elliott wave analysis, I found the irregular corrective phase, and using the precise volume spread analysis to see what the bars are doing, you know, and how we behave, I found again the uptrust, but this uptrust got a very good power for today, traders. And now I'm absolutely sure about this, because if you see from the morning, from the London session, the price is building this resistance. But what's happening here is shake out the weak holders. Remember this. It is a very, you know, you must know one thing. For example, in the trading, the market makers wants to take your money. Okay, so they will try and find where most of stop loss orders, where you position it. Okay, so basically, let's say that, of course, the most of the traders who got experience, of course, they will try to follow the trend, and this is basically the key to find the most trendy currency pair. It doesn't matter if you trade intraday. This is a, by the way, intraday setup. As you see, with the stop loss was 15 pips. I'm going for like 50-60 pips, but the point is, it doesn't matter what you use, you should always follow the trend. Okay, if you watch the intraday, you should follow the trend. But this is, I mean, it's easy to say follow the trend, but to trigger properly, to put a stop loss properly and recognize the proper end of the correction and then try to ride in the trend, it's not so easy, by the way, and you need a lot of experience and a lot of practice, a lot of hours in front of computer. But basic idea is, I don't like to take the setups where I didn't show that market makers did their job. Firstly, for example, if you track this no demand bar, which is also according to the this is also no demand. So if you check these two bars, okay, I don't like to sell here, okay, even though we was in the strong downward trend in this point, strong downward trend, okay, but I don't see any so okay, if there is a big trend, I need to see the end of corrective phase. I need to see the ABC, irregular corrective phase, some kind of distribution before I want to continue with that trend. It doesn't matter if it's a intraday, we speak intraday charts, watching the 5-15 minutes, or even one, or we speak about a 4-hour, 1 hour daily. Okay, it doesn't matter, the same logic. So the sellers from this point and sellers who took position at this point, they got stop out with this upward movement. Okay, so there is a lot of traders around the world who tried basically to sell here. That they thought this is, even though some of them also use the volume spread analysis, watch the spread of the bars. You see very tight spreads here. But what's the point here? The point is this, I don't calculate this like correction. This may be only start of the correction. If I don't see some kind of distribution, and I will show you in this example, this is a potential end of the correction, and this is a strong entry for Asia session traders. This is a very strong entry, okay, because you have the potential finalized ABC corrective phase. The trend is in strong downward, and you have this form of uptrust, okay, and then got 30 pips there, okay. This was on the Asia session trade basically, and you also see in the background, which is also important, some kind of uptrust bar which went higher and then back lower. This is also some kind of uptrust at this point. So here you can start to establish sell positions. Here, if you traded on Asia session early, okay, you see. So you need to basically, I like to see the potential the really corrective phases, because I don't like to trade every retracement. So let's say that price is going like this downward, and you see this one, and you know it's a big downward trend, and you want to sell here, but you want to sell and try to catch potential lower price. That's fine. I mean, the logic is there, but it's not, in my opinion, and what I'm teaching my students and my members. This is not logic I like. I mean, basically the main logic is good, follow the trend, but to properly trigger this, I will wait something like ABC corrective phase in a strong down, any trend up or downward, you will see the ABC, or irregular something like this, before I want to start to sell. Okay. Also, we use expansion levels and projections to find potential ending of the corrective phase. But if I see only this, only one pullback, to sell only because of one pullback, it doesn't matter. Yeah, the volume can be lower there, tick volume. We speak about tick volume, and this can be a average moving average, for example, there. But only one leg and only one pullback is very risky for me, and place stop loss just above that pullback, potential end of the pullback. So very you know, very risky, because if you watch like pullbacks and trade it here, you can be very trapped. If you go to past, you will see that it's not going like that. Okay, let's say like this. You see this upward, and you want to buy here. Okay, and look where the price went. Okay, but what is this in terms of, for example, Elliott wave, in terms of correction? This can be an irregular ABC. Okay, A, B, C, irregular formation. So that's what I'm speaking. You know, if you trade the pullbacks, and you see what the market makers are doing. You see, so price go lower to catch stop losses, then back higher, then price, when you think this is going upward and you buy here because of some test, for example, no, look what happened. Another downward lag to catch even stop loss from this stage here. So this is what market makers are doing, and this is again part of my mentorship program. The point is to try to catch the best moment you can and try to ride with the trend after the decent correction. That's all about. So when I say decent correction, I don't mean pullbacks or, you know, some first dip, you know, first lag. So that's what I speak. For example, look at this. If you want to sell here on this bar, price went a little bit lower and then closed you here, then you think, okay, this is a potential end of the corrective phase, so let's try to ride. You see strong supply came in, you say, okay, I will sell here, but you again stop out. Okay, and you can be stop out a few times and many times lose percentage there, and then you can also, meanwhile, you can become frustrated because of this, and, you know, do a lot of things in this area here, which is basically, if you waited price action to confirm end of a corrective phase, and if you waited decent ABC or decent distribution at this point, redistribution, then you will catch this. Because when something is trendy, like the yen, which is very strong, you only want to sell this currency pair on any perspective. And on intraday perspective, you need again to see the price action and the benefit from the trend. Watch the end of corrective phase, try to find a pattern there, watch the price action again, and that's why I combine the Elliott wave analysis basically with volume spread analysis and Wyckoff analysis, because it's very powerful, you know, in any perspective. Intraday, short-term, long-term perspective. Okay, so as you see, price is going lower, and there is no indication that the price will stop here. We got some high volume here, but still it's not big in the price section. So I will weigh this Potentially I will try to take 160. I will try to take 30 pips more. Right now I'm in plus about 30 pips. Okay, so it's a 1-2 ratio already in plus, but as long the price action is confirming, the that this is going good, I can ride with this. And not just that, I can place the stop loss order. I can place to this area, okay, and on that way I lower and I book more and more profits as the price progressing, the price action. So this is also part of mentorship program, how to manage your position when it's profitable and how to ride with the price action. Okay, so again, this is what I wanted to explain you in this particular example, and this is a live entry. I posted the Forex Factory thread, so that's why the reason, in my opinion, that you need to, if you want to follow my work, go there and subscribe on my also Forex Factory thread, because when I trade like intraday and so on, it will take time to upload a video and so on and so on, so you can be late in the setup. And I posted basically the setup when I entered at this point here. Okay, so again, if you like my analysis, if you want to learn my method and my way of trading, how I combine the volume spread analysis, Wyckoff analysis together with Elliott wave analysis, you can contact me on the Skype and we can start potential cooperation. You can also, I'm managing accounts, so you can start also that. That will be all for this video. I hope you enjoyed. Feel free to subscribe on my YouTube channel, and wish you good trading and have a nice day.